Hey everybody, Economic Ninja here. I hope you're doing great. I'm doing great. Beautiful background today. My awesome hometown park. I absolutely love it. I hope the ducks come by and quack at me. I absolutely love when ducks go by and just quack, 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 quack. I can't get enough of it. It sounds funny, but I'm sort of a sap when it comes to ducks. We're gonna talk today about real estate cycles, gold and silver cycles, and their timing, and we're gonna relate it to the early 80s and some cycle work I did a long time ago that's absolutely fascinating. So, well, at least it's fascinating to me. So with that being said, let's do this. All right, guys, I didn't go anywhere. I'm still here, I'm back. Hey, I hope you're having a great day again. Something was really interesting. All over the news right now, we're talking about inflation. Inflation, right? If you were a part of the Economic Ninja channel back in January to the spring, I was telling you that by the end of summer, we were gonna be hitting inflation, we're gonna be hitting it hard. And then I talked about different cycles. We're gonna go from inflation to deflation to hyperinflation. And that hyperinflation is coming. Now, it may very well be transitory, but it is going to put a hurt on the entire world's economy. And it made me start thinking, about when I first dove into economic cycles. When I was a real estate investor back in 2001, I wasn't studying cycles, but I started to see them because I started to see how the cycles of historical interest rate patterns affected real estate, right? When I sold most of my real estate all my investment in real estate in 2006, after the 2008 crisis, I started broadening my perspective on cycles into all kinds of things. That's when I got involved in precious metals. And I really dove into the late 70s inflation era with that blow off top that happened in 1980. And it was extremely important to me to be able to learn the fundamentals about that, because when I was investing in real estate, how I got so much real estate in my hand, actually, I started with a book called Rich Dad, Poor Dad from Robert Kiyosaki, and that was great. But where I really found my success was getting a hold of all these old books from my father from the early 1980s about how to buy houses with no money down. And the reason why those books were so prevalent back in the early 80s was because it was so easy to buy real estate with no money down, because the real estate market was hurting so bad from that spike in interest rates. So that's what we're going to talk about today. We're going to talk about real estate, and we're going to talk about its effect on gold and silver, especially when it comes to the inflation scenario. And actually, I want to say this. This video is being sponsored, and I'm so grateful to it. And I'm going to be going over the sponsors information towards the end of the video. But this is being sponsored by Prospect Ridge Resources. I'll put a link to all of their news stories so you can stay on top of it if you would like to look into that company. As investment, this isn't investment advice, but their stock ticker is PRRSF. And I'm going to be going over their company later in this video. So now going back to this inflation story, because this is really important. You know, Prospect Ridge Resources involved in precious metals. And I invest in precious metals, I invest in real estate, I have all kinds of different investments. And going back to the early 80s, you know, it was very easy to buy homes with no money down. There's tons of books being written because of the reality that real estate was completely decimated when Paul Volcker spiked rates. And mortgage rates hit an all-time high of around 18 and change, 18 and 3/4, 18.5%, something like that. And that completely decimated the market. Well, the reason why he had to do that was because of that inflation story that was going from the mid 70s to the end of the 1970s. And that is what we're seeing now, but what, in my opinion, I believe is much worse. You see, with inflation back then, it was caused for a couple of different reasons. The primary reason is that we went off of the gold standard, the Bretton Woods standard, and we were allowed to print money more freely. Now, to say that we're printing money more freely now compared to then is it's completely different story. We are printing so much more money today than we were then. I want to say it took I don't remember how many hundreds of years. It took forever to get to $1 trillion in debt. Now it seems like we're printing $1 trillion a month. And like the 70s, they had all that inflation pressure. Inflation was getting worse and worse year after year. And gold and silver were starting to do this, but it wasn't until the very end of that, within a year and a half, where gold and silver went straight vertical and made most of their gains. And that is how it always is, because people don't understand the inflation story. They don't understand how inflation works. And most people, as prices go up, initially they just accept it. Oh, well, that's the cost now. Things are just getting more expensive. And they don't realize what is causing on the back end for those prices to go up. And they keep going up and they keep going up. And for a while, people just say, well, it's just getting more expensive, you know, that's free market. But the facts are, until a certain point, the public is completely unaware of what's going on until it's too late. And then this happens and it starts to take off. So real estate has its cycles, gold and silver has its cycles. Ironically, real estate tends to move before gold and silver in an inflationary environment. Why? Because more people think about real estate than gold and silver or precious metals or anything of real tangible worth, anything that comes out of the ground, like the water behind me. Not a lot of people think, nobody thinks about water while they're, watering their huge lawn and they're mowing it and their lawn looks better than their neighbors. They don't think about water at all until all of a sudden that bill goes up 200 or 300%. Then all of a sudden everybody wants to conserve. And it's like that with precious metals as well. Nobody thinks about hedging against inflation until it's too late and your bills are skyrocketing and you start going, okay, what's going on? They don't realize that inflation is due to a decrease in the purchasing power of your currency because it's being printed like crazy. So when it hits that end spot where people, and it's in the news, and right now inflation is in the news all over the world. That's what everybody's talking about. Yet you were hearing about it on the Economic Ninja channel about 6 months to a year ago, and to get ready for it. And so if you position yourself properly, that's when the most gains get made. However, in the beginning, when you position yourself, it's almost like the most boring time in the world because your investments aren't doing anything. It's when all of a sudden everybody else dives in, that's when you make your massive gains because you were prepared originally. So when we talk about these resource stocks, there are times when they could be totally boring, and then there's times where they are smoking and exploding. I've seen in the last 2 years, multiple stocks that I've owned go up 200-300%. I even had some call options go up in the 1,000% realm. And it's because of small moves that happen in precious metals, right? The leverage that you see to these are massive. Now, guys, I'm not a financial advisor. I'm not a financial professional. I'm an investor. I like finding opportunity where nobody else finds opportunity. And so that kind of stuff is really exciting to me. And what I'm doing right now, I know, you see, I love the ducks. They're coming to visit, hoping that we feed them. So my point being is that it could go from boring to exciting, but really what you need to do is use these days right now before gold and silver have made that big move. When the world wakes up and goes, oh my gosh, all of the fiat currencies around the world are being debased and we need to do something about it. And they dive into real tangible assets, especially things like precious metals that have not made their massive move yet. That's what's really interesting. So to me, I look at not only investing in precious metals, but I personally have some mining stocks. I am really big on learning about them now and positioning myself for when a dip happens. And I already have all of my ducks in a row. See, they heard that. I wish you guys could pick up. They're like squawking like crazy. When you have all your ducks in a row and you know which companies you want to invest in based on the team involved, their fundamentals, then when there's an opportunity arises, you start to see inflation get worse, geopolitical tensions get stronger, things are happening, you're like, okay, and possibly dips in the market, and you go, hey, this is a good opportunity, an entry level, something small. But then you start looking at buying those dips and you buy into strength. And so again, I am not an owner of Prospect Ridge Resources, but I wanted to go over it because as we keep bringing you these ideas, you start learning. You don't have to dive right in. You know, that's something I learned a long time ago. Don't dive into anything. Get your ducks in a row, learn everything you can about something, then take your time and then act when the time is right for you, all right? So without further ado, let's jump into the studio and we're gonna go over this. And again, thank you so much to Prospect Ridge for sponsoring this video. Here we go. All right, here we are. We're gonna be checking out Prospect Ridge, the sponsor of today's video, and I do wanna thank them again. This gives me the opportunity to be able to keep bringing out content. So I'm really grateful for that. And again, we're going to walk through the website. We're going to talk about the slide deck and some other things that I'm going to start doing differently in some of these videos. And again, full disclosure, I do not own this stock. I am constantly looking at mining stocks. I do own mining stocks. This is a exploration company. So we've talked about that before. Exploration companies can have a lot of upside and downside in the price when it comes to the price of gold and silver or whatever metal that they are mining, whether it be copper, zinc, anything. There's a lot of leverage there. Okay, so I want people to remember that this is not a junior or a major mining company. This is an exploration company. They're going out, buying up properties, doing the drilling, getting the core samples out of the earth, saying, okay, this is how much of this metal is in the ground, and they now either market it to a larger mining company to come in and extract the metal, or they look to raise money to do that themselves. Okay, so a couple things I wanted to go over is and I've got a slide deck, the investor slide deck that I'm going to put in. Actually, I'm going to show you that right here, actually. So this is the investor slide deck that they put out for investors, and it talks about the team, the different properties that we're going to get to in a second. But let's go over the CEO. The CEO, I believe, is one of the most important aspects. Between him and the CFO, a lot of major decisions are made there. So I just want to go over this right here. This is Mr. Iverson, who brings 30 years of executive experience in public markets, including corporate development, capital formation, acquisitions, and more. Where I really like this is in '98, Mr. Iverson founded NeoGold, NioGold, hopefully I got that pronounced, mining corporation, and he co-founded Fortuna Silver Mines. Now, if you guys have been in the mining industry for a while, you'd know that Fortuna is quite a large company, and I like that. Lots of corporate experience, especially in the mining sector. All right. What I'm going to do is we're now going to click over here to something I want to do new, and I like this. And what I'm going to start doing is I'm going to put down in the comment section below, I'm going to pin a link to Prospect Ridge's newest news. So if you want to keep track of what's going on with them, you could use that link to keep up to date with all of the stuff that they're putting out as far as drilling results, land acquisition, and all of that kind of stuff. So you could either come here to the website, or you can actually go to this link, use this link, and keep up to date with all of their latest and greatest finds and discoveries. We're going to go over the projects, or one specific project I want to talk about. It's interesting. It's called the Holy Grail. Now that you can't just name it the Holy Grail and not think about Indiana Jones. Now I'm thinking about Indiana Jones in a goblet, but they really think they've got something here. So I wanted to go over it. It gives a map of the area, and it says the property is easily accessible with multiple service roads, logging roads, and ATV trails over the property. And we've talked about that before. That's something you really need to look for in a mining company. It's one thing to say I've got a piece of land and it's got tons of gold or silver or copper in it. It's another thing to go, yeah, but it's 50 miles away from the closest paved road, and it's probably 20 miles away, let's say, from electrical connectors, connections to be able to run a mining operation. And so that's why in these slide decks or on the websites, they want to tell you, how close is it to modern amenities, good roads that you can actually bring equipment in and out of. It says here that the Holy Grail property claim block has 12 past producing high-grade gold and silver hard rock mines, and within a 15-kilometer radius. It says the recent exploration in 2020 has discovered multiple outcrops of exceptional gold values, showing gold grades of, and you start getting numbers, my eyes roll in the back of my head. You know what I'm talking about. And it's really important when you start looking at this, what their numbers come out as. When these companies, all exploration companies give drilling results, it's really neat to be able to compare current drilling results with the past drilling results. That's what I'm always looking for, because especially if it's recent past, it's one thing to say, hey, this is an older producing mine. In the past, it brought out this much ore, but now you want to see what their drill results are hitting with. Where are the drill results actually coming out of too? Are they drilling in a place that was already mined, or are they trying to do these outlying areas of drill results from where the original mine was? Because they go, okay, we already know how much gold or silver or copper came out of this earth right here. We now want to identify what's going on outside of that area, so we can identify, what kind of equipment we need to bring in, how much ground we need to uncover to get to that, and find out where the source of that those minerals and metals are. So right here you can see in the Holy Grail a handful of large producing mines that have brought out lots and lots of metals in the past. So that's usually a good indicator of past results. They sort of want to say, hey, this could be future success, but you don't always want to go by that. Again, you want to go by those drilling results if you're looking at a resource company. And again, I'm not a professional finance advisor. I'm not a professional investor. I'm an investor. This is what I look for in drilling results. Are the drilling results getting better? Are they, when they build that plot map of the first round of drilling, then you have your second. What are how are the ore grades looking as compared to the last time or to other companies in the area? Okay. Another project that they've got going right here is the Galinee project. The Galinee project, its location and what they're expecting is all right here. I think it's really important for you to dive in and do your own research, because that's the one thing that's really tough about any investment when it comes to in the metals space. It's one thing to do all of your due diligence on everything about the team, about the investors that are already investing. I love to look at the investors, and also the actual projects they have going on. It's another thing to understand you could have all of that doing awesome and great, but then you have to look at the price of the actual metal that they're mining on the stock exchanges. What is it doing? Because when it starts to take off, a lot of these companies can just explode in value. On the flip side, if that metal comes down because of geopolitical threats or any other myriad of reasons, it could take the stock and take the price down with it. Doesn't mean that this company did anything wrong. Nothing changed since the day before when that metal was a totally different price, a higher price. But you have to realize that you have two sides to investing in precious metals mining stocks or resource stocks, because you have those two factors: how the company is ran, and then the price of the underlying asset that they're hunting for. So that's something which I honestly love, because you could play two different aspects. How good a company runs and where you think the metals are going to go. So you have two different complete dynamics that could bring shareholder value. So I think that that's awesome. With that being said, we went over the news, the projects and corporate side, who the CEO is. This would be, the download. That's right. This is for investors. So this is another spot where you could see the slide deck, but I'm going to actually put that in the description of the video as well. So if you want to see the investor slide deck, you can go ahead and do that. So again, I want to thank Prospect Ridge. Thank you guys for watching this video. This is what the videos like this is what allows me to keep doing what I'm doing, to keep warning people for what's coming up in future events and how to prepare for those. So with that being said, I thank you again. The Economic Ninja is out.